Google giveth and taketh away. Let's talk to Jonathan Marino. He's editor of Reuters PE Hub. Hello, Jonathan.
Hey.
I'm going to trip over my wires here.
Oh, no.
All right, let's talk about Google. They are slashing 4,000 jobs at Motorola Mobility, which is 20% of the workforce there.
Right. And normally when you lose 20% of your workforce, it's a really bad thing.
Normally.
It's totally the opposite of, say, Research in Motion is a pretty good example. They've been trying to get rid of workers to make assets more attractive for buyers. That's not what Google is doing here at all. They only recently got foreign regulatory approval for their deal, so it's time for them to move forward with the integration, the acquisition, and moving their Android platform onto an actual device.
Okay. Well, still bad news for people who are losing their jobs.
Absolutely.
But of course, they acquired Motorola Mobility really for the patents, people were saying, but now they got to get down and make this a profitable business and make the smartphones.
And they only recently got the okay to do so.
Okay. And the other news in Google is they actually, it's travel season, it's August, bought Frommer's.
Right. First, second, now this. They're moving into more of a, I guess, a social mode now. It seems to me like they could even go out there and buy an airline booking company. There are plenty out there listed on the stock market for just a few $100 million. Google obviously has the capital to make that happen.
Okay. Let's talk about Knight Capital, the ongoing drama of Knight Capital. Move over to the big board here and look at the shares, which today are down 6%. Some news out of the financial news saying that they've hired a European equity sales group from Morgan Stanley.
Right. It seems like I guess they might have needed to do that. There were some reports coming out right around the time that they took investment capital from a private-public consortium that said, that people were trying to jump ship, rats off the ship, so to speak.
Shocker.
It's still not, I guess, that big of a deal when you consider the fact that their electronic trading system still, despite what happened, is their most valuable asset. It just can't disappoint their shareholders or them once again.
Right. Just make a note, shares are down 74% in this month alone.
It's a good reason to send a resume out.
It is a good reason. Okay, let's move to our hot spot and look at some bouncing stock prices today. Now, Sears, which has long been flagging despite its Craftsman, I own Craftsman, and Kenmore, stalwart American brands there. A Barron's article giving Sears a bump in their stock price today. They're up 3.5%.
Right, they've still got a lot on their shelves, and I guess the notion that they could liquidate would be a real big boost for shareholders. The other option for them obviously could be potentially an LBO, not that any bidders have stepped up yet, but the retail space is really hot.
Okay, and the CEO there, hedge fund manager Edward Lambert, basically saying he owns 62% of the stock, saying that he's got a 2-year plan where he's going to spin off or sell, as you mentioned, including they own some valuable real estate in Canada. Who knew? It
remains to be seen if shareholders are going to be patient for two whole years, though.
Yeah, that's true. Okay, let's move on to Visteon. Very sexy here. Auto parts, but they are a former Ford subsidiary, and they're up 8% today, even though their sales have been down and their forecasts have been gloomy. But there's a little CEO shuffle happening here, which I guess is giving them a bump.
It's good news on bad news. It's tough to tell, I guess, why Don Stebbins, the CEO, hung around for as long as he did.
Yeah.
He only recently left the company. We're not certain why, but if you look at
4+ years, I think, or something. Yeah.
Right, and if you look at their share price over the last 12 months, it's pretty obvious why he took this time to leave the company. Lately, shareholders have had a little bit to get excited about. They've made some M&A exits to some foreign buyers. I guess some folks are expecting, or maybe even hoping, that they're going to do more deals in the future.
Okay. Move on to Groupon. They've had lots of troubles. Earnings out today. They have a little bit. They're up actually 4% ahead of earnings. But the shares have been flagging. There's been some issues in terms of transparency with this Groupon goods, how they've been reporting that. Story in the Wall Street Journal today about high turnover Groupon, compensation issues, lack of ability to be promoted. But again, they have a bit of a bump today, up nearly 4% ahead of the earnings. Give us a preview.
It seems like mutual funds are probably the primary investors who are buying in here. I read something about this earlier online today. Groupon's been having a lot of difficulty. They disappointed after their IPO. We still don't have a very clear picture of their revenue because they keep rejiggering their economics every time they put out a statement almost.
Right.
If you look at other deals, other companies in the daily deal space, you're not going to get good news elsewhere. Amazon recently substantially marked down its investment in Living Social, and it doesn't look like they're going to be an IPO candidate anytime soon, just based on Groupon's performance.
Right, and Living Social just pulling out of the Middle East.
Right.
What are those daily deals in the Middle East?
I'm sure rugs.
Okay, rugs. Excellent. All right, let's then go back and look at the market monitor. What's the market doing today? Down, Jonathan. We're down big time.
We're still sliding.
Almost 90 bad news out of Japan, global economy slowing, and the S&P, which had been up for 6 days, no more, down today.
No, it doesn't look like we're going to continue our streak.
All right, too bad for that. All right, Jonathan Marino, editor of Reuters PE Hub, thank you so much for being with us.
Thanks for having me.
Don't forget, we tweet. Follow us on Twitter, Reuters Insider, @Reuters Insider, and our YouTube channel is Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.